So the market seems to think Apple is way late to the AI party. But you know what? That whole narrative just misses the real story. We're going to take a look at how a massive shift in leadership and this deep, deep investment in their own custom silicon isn't about playing catch up. No, it's about building the very foundation, the literal road that the entire AI future is going to run on. And this quote right here, this just nails it. It's such a powerful and honestly contrarian idea that just flips the whole script. See, the question isn't whether Apple can build a better chatbot. That's not the game. The real question is whether anyone can build a meaningful AI experience without paying Apple's toll to use their road. Okay, so to really get this toll road idea, we've got to start with the problem that everyone else sees. Let's dive into what's being called the AI valuation paradox. I mean, seriously, on any big institutional trading floor, the conversation is pretty much the same. You've got companies like NVIDIA and Microsoft just pouring billions into AI, and their stocks are, well, they're going to the moon. And then you have Apple, the undisputed king of consumer hardware, and it just feels kind of stuck. It's like in this new world of AI, that crown is starting to look a little heavy. This slide right here just perfectly captures that anxiety in the market. It's what we call a valuation inversion. Look at it. Apple is trading at a much higher forward price to earnings multiple. That's basically its stock price compared to its expected earnings than NVIDIA is. And yet, its growth rate is just a tiny fraction of NVIDIA's. So what does that mean? It means you're paying a huge premium for way slower growth. For big money investors, that is a massive, flashing red flag. And it begs the question, where on earth is Apple's AI growth going to come from? And that question leads us right to the core of this whole thing. See, the market's out there looking for some shiny new AI app from Apple. But the real answer, the real value, is hiding in plain sight. It's the hardware. It's this engineering-first pivot that's been in the works for years. And make no mistake, this isn't just about changing names on the org chart. It's a complete strategic realignment. Tim Cook, he was the efficiency architect, an absolute master of supply chains. But the incoming CEO, John Ternus, well, he's a true hardware nerd. He's the guy who led the absolutely critical transition to Apple Silicon. And then promoting the chip genius Johnny Srouji to chief hardware officer, that just cements the whole thing. Apple's focus is shifting away from the spreadsheet and right back to the engineering lab. This leadership pivot is the hardware strategy. Now, to really get their strategy, you have to understand this term, Edge AI. While pretty much every other big player is building these enormous, power-hungry data centers in the cloud, Apple is making a completely different bet. They're betting that the most important, most personal AI stuff is going to happen right here, on the device that's in your hand. And why? Because it's faster, it's way more private, and, as we're about to see, it is astronomically cheaper. So how does Apple make all this Edge AI magic happen? Well, it's through a piece of pure technical wizardry called Unified Memory Architecture, or UMA. This right here is the secret sauce. It's the core of their moat. In a normal computer, the brain, the CPU, and the graphics part, the GPU, they have their own separate pools of memory. With Apple Silicon, they all share one big pool. And for tasks that eat up a ton of memory, like AI, this is a revolutionary advantage. And this visual just shows you the difference so clearly. On the left, you've got the old way. Imagine two workers on an assembly line, right? And they have to keep passing this really heavy box back and forth to each other. It's slow, it's clunky, it's inefficient. That's the data bottleneck. Now look at the right. That's Apple's UMA. All the workers are standing around the exact same table, grabbing the same parts instantly. There's no passing, no waiting, no copying, and that is why a MacBook can run these incredibly complex AI models locally that would just bring a PC that costs the same amount to its knees. Okay, so this incredible technical advantage translates directly into a massive, massive economic one. And it creates this just giant chasm between Apple and basically everyone else. Just look at these numbers. This is the capital expenditure, or CapEx. It's the money Apple's rivals are projected to spend in 2026 just to build the data centers to power their cloud AI. I mean, we are talking about a combined total of well over $500 billion. It's a hyper CapEx arms race, and it is phenomenally, unbelievably expensive. Now, this chart boils that entire arms race down into one single brutal comparison. In just one quarter, Microsoft's CapEx was over 50% of its revenue. Think about that. They're spending half their income just to build the factory. Apple, on the other hand, spends about 3%. So why is the difference so incredibly stark? Because Apple isn't building the factory. You are. And that's the brutal, beautiful truth of their model. They have brilliantly offloaded the cost of the entire infrastructure onto us, the consumer. Every single iPhone that gets sold is a personal, pocket-sized data center. Apple adds another powerful node to its global AI network with almost zero capital expenditure. It is an unbelievably efficient model. So if this strategy is really that powerful, if it's that capital efficient, what's the ultimate proof that it's actually working? Well, the proof, it turns out, comes directly from the competition. It's a validation of Apple's moat that has a very, very specific price tag. $6.5 billion. This single number might be one of the most important numbers in the entire AI landscape right now. And here's what it's for. This is the price OpenAI, the creators of ChatGPT, paid to buy a hardware startup founded by Apple's legendary former designer, Johnny Ive. Let that sink in. The world's leading AI software company is spending billions and billions of dollars to get into the hardware game. Now, why on earth would they do that? The crucial point is this. OpenAI knows it can't win if it's just another app on an iPhone. They've got to bypass that 30% App Store tax, and they need to own the future user interface. To do that, they have to control the whole experience, from the silicon all the way to the screen. So this move, it isn't really a threat to Apple. It's the ultimate form of validation. It proves that the physical device is the real prize in the AI war, and software, by itself, is no longer a defensible moat. So all of this leads to this fundamental shift in how we have to think about Apple's value. It's not about selling phones anymore. It's about providing the infrastructure for the future. And this is the new thesis right here. We need to stop thinking of Apple as a consumer electronics company. We need to start thinking of it as personal infrastructure as a service. The iPhone isn't just a product anymore, it's a platform. It's a secure, private, incredibly high-performance computing node that you, the user, actually pay to own and maintain for them. And they are just locking in this advantage from every possible angle. First, for the really big tasks that are too much for a phone, they have something called private cloud compute. It uses their own silicon and their own data centers to extend the iPhone's legendary security. It's basically a new standard for private AI. Second, for the developers, they offer these powerful on-device AI models for free. This makes it a total no-brainer to build for iOS first, which cuts out API costs and locks developers right into Apple's world. And finally, all of this sits on top of a base of 2.5 billion devices. That is a distributed AI network that no competitor can even dream of matching. So let's just bring it all home. While most investors were sitting around waiting for Apple to drop some flashy new AI app to compete with ChatGPT, they were completely missing the real story. The tectonic shift in value was happening way deeper. It's the transition to custom silicon, the one pioneered by their new CEO, John Chernis, that created this impenetrable hardware moat. And all of this leaves us with one final and I think pretty provocative question. As AI gets more and more dependent on efficient, powerful, and private hardware, can a pure software company ever really truly win? Or is the future of AI just destined to run on the toll road that the hardware nerd built?